In this video, I'm going to show you why Wall Street is bullish. I'll show you the actual entry points that the biggest head honcho on Wall Street is recommending to institutional investors. And I appreciate you're not an institutional investor. I'm not an institutional investor. Winston isn't an institutional investor, but I think we deserve the same information. And Winston has, of course, sniffed out that complete research document, which I'll share with you. And I'll also give you one warning, a misstep that many investors are about to make that'll cost you thousands or maybe even tens or hundreds of thousands of dollars. And I'll also share with you exactly what I'm buying right now. And I'll give you one better. I'll give you the rules of why I'm buying it, the rules that every successful investor of the last 20, 30, 40 years agrees are the way to select stocks in situations like this. And rather than making this a really long video, I've put the rules into a separate video, which you can access completely for free at felixprehn.org/get free. Because my intention is for you to get free, come out of this bear market with a great big smile and a great big portfolio. So go check that out. And then I'll walk you through the 3 bullish reasons, the warning, and what Wall Street is telling the big boys to buy. Okay, the chart here on my screen is showing you the S&P 500. You should probably have heard of before, stating the bloom and obvious. Why am I showing you this? Because last week, the S&P dropped, right? Tell me something I don't know. But what also dropped? The VIX also dropped, the fear index. Fairly unusual for fear to come down when markets are coming down. And that can signal that we are at or near the bottom of the market. It certainly did that at 2020. It's done it in previous dips as well. So it's a good indicator that the fear is coming off. But the fear is still sitting at something like 29. To really make sure the fear is gone, you want that to be at 20 or less. But watch out for that. We get another week like this where, or even a couple of days like this, where the VIX keeps falling. Even when the market is falling, that's really telling you, okay, people are getting chilled about this. They know the bottom is near. So that's item number 1. If that makes sense to you, by the way, just put a 1 in the comments down below. And I understand that the first point is landing here for you. And here is another one. It looks a little complicated because Wall Street likes to make things complicated. It's a chart from Fidelity. And what do you see here? Well, you have in black the S&P 500, that black ziggity-zaggity line up here. That one, again, is the S&P 500. And then you have this yellow kind of zone, right? And what do you see? Well, the market basically bounces up and down amongst that zone. It shoots a little above it. It then tends to collapse. And we just did exactly the same thing here at the top. We shot a little bit above it. And now we're at the very bottom of, we're at the very bottom of that range there. Let me zoom in on it for you. So you can see we're literally at the bottom of that zone there. Typically, again, that indicates we're very close to it. Now, there were situations where the world was going to end, like 2020. In fairness, we dropped quite a bit lower. But again, it's a sign that probably a lot of the selling seems behind us. That's what Wall Street's saying, right? So that's item number 2. If that makes some sense to you, again, put number 2 in the chat here. And number 3, well, this basically shows you, squiggledy chart, how short is the market. Now, they are really short. The shortest they've been since 2020. What happened in 2020? Of course, COVID. So we're at those levels. Now, what happens, or what would happen, if you're this short and the market goes up a couple of percent? Well, you'd be unwinding your shorts as quickly as you possibly could, right? Otherwise, you'd be caught with your trousers down. Would want that now. So how do you unwind a short position? How do you go back up? You got to buy the stocks. So because Wall Street is so short now, there is a good chance if we do go up, we're going to go up with a bit of oomph here. So again, don't short the market. It's a bad move right now. So that's number 3, right? Shorts are very short. Therefore, it's likely, we're going to bounce up pretty hard. Okay, so what's my warning then before we go into the actual entry points from the guy who literally called this bear market, called the gold rally, and much, much more? I'll show you that in a second. The first thing is really, really important. So a lot of you guys are plowing into leveraged ETFs. You can see it on the chart here. Don't deny it. You know who you are. Okay, so here is what happens with leveraged ETFs. Let's just compare it to if you owned the stock and say the stock was trading at $100, right? And you bought the ETF, which let's say is 3 times leveraged, 3x ETF, like many of them out there. So now the market drops 10%, okay? So what happens? Well, your stock is now worth $90, right? With me so far? What about your 3 times ETF? Also drops 10% because it's the same thing. Where are you at then? You're at $70, okay? But that's not actually it. The really, really key part is, and I'm going to put this in red because that's how important this is. What if the market goes up again 10%? Where do you get to with your stock? You go from 90 to, correct, you go to $99. So you're at minus $1, right? Not that bad. What about your 3 times ETF? Say the market goes up 10% again. Now, the ETF triples that, so it actually goes up 30%, right? What's 30% of 70? It's $21. So you go back to $91. See the problem here? The leveraged ETF is now down $9. So leveraged ETFs, when the market's falling, do not recover at the same pace as a stock. And therefore, when you're in a market like this, which is a bear market with a significant risk of going somewhat lower, putting your money into a leveraged ETF is really, 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 well, risky. Right? I was going to put something else there, but you know what I'm saying, right? So if you understand this, and it's a bit confusing, it's a bit complex, I get that. But if you understand this, you understand more than 99% of people out there. So please go and explain this to somebody else who's leveraging their money like that. It's not the smart way to leverage. If you want to leverage, learn to trade options. Seriously, it's a safer way of doing it because you can limit your downside with that, and they don't have this problem. But leveraged ETFs are very risky. They were not created as long-term investment instruments. They were created to allow the big funds on Wall Street to hedge their positions for like a few hours or a day. And now people are using them over months and years, and it's a real problem because on every dip, you come back up with less money than before. Next dip, less money than before. Next dip, less money than before. So what happens is that you are doing this if you have a market with significant drawdowns, right? And so you're burning your money, and I don't want that for you, right? I hope that makes some sense to you. If that makes some sense to you, write ETF down below in the comments, and I understand it. And maybe take a screenshot of this. That might also be a good idea to really, really sink in. Right then, so let's move on to what Bank of America. Their head honcho is called Hartnett. This is what he's put out. This is the full research note here. And he, in fairness, predicted a lot of this bear market, and he's been telling us to buy gold for a while, and he's been very, very right on that because it's up like 20-odd%. So what's he saying right now? He's saying investors are emotionally bearish, but not extremely physically bearish, as in their institutions and private clients have not sold hard. That changes if the expectation of what's about to happen changes. So the clued up investors on Wall Street expect that Trump is front-loading the bad news from now until Memorial Day. All the Doge stuff, all the tariffs, all the sacking of people, all the stuff people don't like. And that from Memorial Day onwards, so May 26th onwards to Labor Day, they're going to push aggressively into tax cuts, deregulation, and sort of domestic investment. And that'll change the sentiment. And then basically from September to the end of the year, we're going to get that full bull momentum, as he calls it here, from tax cuts, Fed interest rate cuts, and all of that good stuff. But if we get to May, and there are no tax cuts, there's no deregulation, there is no good news on tariffs, then these guys are going to start selling too, in which case we go into a proper nasty market. So what is Bank of America telling its institutional clients to buy? They're saying this. They're saying Nibble on the S&P at 5,400. We're below that already. Byte at 5,100. Or wait to Gorge at 4,800, which is basically pricing in a recession. So Byte at 5,100. Let me put that on a chart for you here. Here's the S&P chart. So he's basically saying, let me get a pen, that here at 5,100, he's saying Byte, as in, go shopping. At 4,800 down here, he's saying Gorge, so go nuts. And he's saying if we rebound to 5,400, he's saying Nibble, because it might be over, but it might not. So he's just saying be careful on the way up here, because these could be fake outs. These could be like, we've already done that twice here, right? And they were fake outs so far. So I'm going to write those down. 5,400, be careful. 5,100, bite. This is a Bank of America saying. It's not me saying. I'm not giving you financial advice. I'm just telling you what he's saying. 4,800 Gorge. That's his advice, right? So now, the advice is targeted at institutional investors and all that kind of thing, not you. So obviously take it with a pinch of salt, but that's essentially what he's saying. And he's also talking about bonds and so on, but we need to get into that in too much detail. So what the heck am I buying right now? Well, let me show you. So there's a couple of sectors I'm bullish on. Now, I'm not bullish on tech, mostly. I'm not bullish on semiconductors, and I'm getting killed for that in the comments. People sort of unloading their whole like Trump loathing into my comment section for some reason, and that's okay. I don't vote for the guy, guys. I'm not American. It's not my fault, okay? I just got to take the facts the way they come. That's all. That's my only job, because my job is to make money for myself and my family, and therefore continue my beautiful retirement. I'm bullish gold. It's a little extended, so I'd like to see a little bit of a pullback. If I see a little bit of a pullback, I'll definitely load up more on gold stocks. Silver, similar story. I'm also bullish on silver, which is actually trading at a better level. I'd like actually to see that pull up a little bit. Why? Well, again, watch the masterclass. That really explains the rules for you, and it means not every video is like 3 hours long here, but I'd like to exceed the previous highs here to get really, really bullish on silver. I'm also bullish on a bunch of consumer stocks. This here is one, for example. And again, don't just run out and buy it blindly, because Felix told you, unless you really understand the rules. Dr. Pepper, horrible stuff. Hate it, but it's a good. The stock looks beautiful. So this looks pretty good. I'd love to see that break out just with a little bit more oomph. Let me get a line here above these recent highs, because you see that 1 high, 2 high, 3 highs. We need to like go a little higher than that. Friday after hours looked promising, although volume wasn't huge. And there are a couple of other sort of fizzy stocks in that space. There are also some stocks in the bar and restaurant chain space. There's a couple of others. Defense. I am bullish on defense simply because, well, the stock looks good. The setup looks good. If you understand the rules, again, watch them. Links down below. I think we're going to get a huge upgrade of the US defense sector. And it means companies like Northrop Grumman, for all their ethical beauty, are going to get a lot more money. I also mentioned this one to you guys last week. Again, don't just buy stuff blindly because I am. But this is a pretty sweet setup here. That's sort of the trajectory going up here. The lows also kind of textbook. And then in between that, what did we do? Well, we sort of consolidated, but in a really nice kind of upways pattern. And if you watched my masterclass down below, you understand what I'm talking about. So I'm liking that. And there are a bunch of other utilities out there as well that have that. Again, you want to look at the fundamentals, you want to look at what it's about, all about and so on. But just to be transparent, yeah, I'm not buying any of the usual. I'm not buying any big tech stocks. I'm not buying AMD or Nvidia or any of that stuff. We're going into a market that is bear market. That means you kind of value stocks are more what we're going to want to be looking at. You want to be looking at companies with good earnings, good balance sheets, strong brands, strong pricing power, less tariff exposure. So domestic things that make stuff in the US, ideally services that people have to buy come what may. Like if you live in California, you need water. It's a desert, right? So you're gonna pay the California Water Services Group, and they've done a very good job in the last year in terms of improving their financials and so on. So that's what I'm looking at. And if that's helpful for you, let me know down below in the chat. But above all, use this period not to vent and rant and get angry. You have the control over your economy. And I think once you get into that mindset of like, you control your money and your world, doesn't matter what the president does or Congress or, some foreign country or whatever, none of that matters. I always have the best years in recessions. I always have the best years when markets are imploding, because I've learned from my mentors how to manage my money. So even in business, it's actually usually easier to do really well in recessions because everyone else is just too caught up in the noise and all of that. So turn off the news, focus on what matters, set yourself some goals, knuckle down, learn, and you can do that by clicking on felixfranz.org/get free to start with. And I hope that gets you to a good place where you start to understand more about entry rules and exit rules and what we're looking at here. And I appreciate you watching, and I wish you a brilliant week ahead. All the best. If you're worried what your favorite tech stocks are going to do this following week, are they going to keep crashing, or is the rebound in sight? Then you found the right video for you. We're going to run through, and you can see my week ahead